Hello, today the topic we are going to cover is how to apply for a personal loan in United States. Know the steps to getting the cash you seek at the best possible rate. We A personal loan is money that you borrow for just about any purpose including debt, consolidation, an unexpected medical bill, a new appliance, a vacation or even a student loan. You pay the money back including interest in monthly installments over time, usually 2 to 5 years. Most personal loans are unsecured, meaning that they are not backed by collateral. The interest you pay is expressed as an annual percentage rate (APR). The average interest rate on a personal loan is 11.21% as of November 2022, but it can range from 6% to 36% depending on your credit worthiness, including an examination of your income, debts, and credit score. You can get a personal loan through a bank, credit union, credit card issuer, or online financial lender. You can normally apply online or in person and will have to provide some basic and financial information. Your lender will consider employment status, income, outstanding debts, and overall credit score to assess whether you are eligible for a loan and determine the interest rate that you will pay. Key takeaways: a personal loan can be used for almost any reason from debt consolidation to unexpected doctor bills to taking a vacation. Most personal loans do not require collateral, which makes them unsecured loans. Personal loans must be paid back over a set term, usually 2 to 5 years. The best personal loans will depend a lot on your credit worthiness as measured by your credit score and why you need to the loan. How to qualify for a personal loan? There are many steps to take to qualify for a personal loan, with the first being to make sure that it's right for you. For example, if you want to borrow money to remodel your house or buy a car, a home equity loan or an auto loan may come with a lower interest rate. Unlike unsecured personal loans based only on your credit worthiness, these loans are secured by the home you want to fix up or the car you want to buy. Although paying for a family vacation or consolidating debt fits into the personal loan category, you also may want to check into a 0% introductory APR credit card. But if you go that route, be sure that you can pay off the balance before 0% rate expires. Things to consider before applying for a loan. Personal loan. Before you either start shopping around for a personal loans or begin to work out how much you would like to borrow, there are a number of important considerations you should make. First, make sure you understand how loan providers express the cost of a loan. You can make sure that you have the ability to pay it back. There are a number of online calculators that can help you to work out your actual monthly payments. Make sure you consult them when you are shopping for loans. Though personal loans are typically a fairly cheap way to borrow, you shouldn't overlook other sources of cash. For example, you can borrow against the equity in your house or put an expense on a credit card if you are sure that you can pay it back quickly. What documents are required for a personal loan application? Each loan provider is different and may ask for different documents as you apply for a loan. On the loan application itself, you will be asked for your SSN, which is Social Security number, address, and your income. You will also normally need at least 3 documents to apply for a loan. Proof of identity, such as a driver's license, passport, ID card, proof of your income. You may need to provide pay stubs, tax returns, W-2s, and bank statements or your employer's contact information. If you're self-employed, the loan provider may ask. You can use a utility bill or your rental agreement for this. You don't have either, you might be able to use a mortgage, voter registration card, property tax receipt, or bank or credit card receipt. The average APR on a personal loan as of October 2021 for those with excellent credit scores of 720 to 850 is 11.4%. Decide how much to borrow. Remember that when you borrow money, you don't just pay back the original loan, except for that 0% paid off on time. You also pay interest on rent and on the money you borrow. Finally, make sure you can afford the payments on the amount you do borrow. There is nothing worse than overextending yourself financially. If the best thing would have been to wait a while until your finances improve. Check your credit. Important. The higher your credit score, the more likely you are able to be approved for a loan at a better interest rate. Know your rights under Regulation Z. In 1968, the FRB implemented Regulation Z, which in turn created the Truth in Lending Act (TILA), designed to protect consumers when making financial transactions. Personal loans are part of the protection. This regulation now under the auspices of the Consumer Financial Protection Bureau (CFPB). Way to obtain a personal loan. Personal loan sources are divided between two main categories: bank and credit unions, non-banking financial institutions (NBFIs). Check your eligibility, get pre-qualified, check out the details, and at the end apply for the loan. Approval and funding times vary by lender, but you can expect something close to the following. The bottom line: personal loans must be paid back over a set term, usually 2 to 5 years. The best personal loans will depend a lot on your credit worthiness and why you need the loan. Personal loans can be a fairly inexpensive way to borrow if you have good or excellent credit. That's it, guys. I'll see you in the next video. Take care. Bye bye.